Okay, so pretty much just wanted to make a trading recap just on my day trade here on AMD to the upside. The reason I took my trade, my thesis behind my trade, how I built my thesis, my entries, my exits, and so on. So as always, I'm starting out on the higher time frames, just because, right? These hold more weight, more conviction. So starting here on the daily, I already have my key levels drawn out coming into market open. So all of last week, AMD has been consolidating. It's been consolidating for pretty much a month now. But as we know, right, this 162.05 is a key level, key resistance level. Been watching this for a while now. Why? Because every time price pushes in, sellers push it back down. We can clearly see that here, right? Wicks do the damage, body tells the story. So even when price pushes through this 162.05 on the intraday, the body of the candle is closing under this. So as we know, this is a clear key level coming into market open. So if we go here on the 1 hour, right, this has always been the no trade zone in between 162.05 and 157.80 for clear reasons, right? This is a low probability environment that you want to be a part of, right? We want to avoid channels, we want to avoid ranges, right? So we go here on the 15 minute, right? This 162.05 was a good key level. Not only is it a daily resistance, it's a previous day high. That's a good confluence for me. So I'm already intrigued by this coming into market open, right? So I trade on the 2 minute time frame, and about 2 to 4 minutes into market open, my alert goes off that we broke above this key level, right? So buyers are in control, right? As we can see, 4 minutes into market open, boom, buyers end up breaking over 162.05, right? So a couple of things, right, prior to taking this trade. One, I'm intrigued because we're showing divergence against the overall market. Now, what does that mean? That means when QQQ is, consolidating or pull it back a little bit, AMD is still moving to the upside. That's showing me that buyers are in control. That's something that I really like. That's something that has me intrigued. Now, there's two main things that I really want to focus on and explain. Number one, right? The number one most important thing to trading the break and retest is displacement, right? Displacement is the most important thing, right? That's the most important entry criteria. So as you can see, right, we end up breaking, we didn't hold, we break, we didn't hold. Look what happens when we finally get that big breakout. The bigger the displacement, the better. So good displacement, retest, target the upside, right? That's number one. Number two, is something that I've learned a very long time ago is you want to treat your key levels like mini zones. That is very important, right? Because you're taking trades off of higher time frame key levels. So you have to give them a little bit of room to pull back a little bit before it continues to the upside or to the downside, whichever way you're trading. Now, that's my case. That's typically what I do, right? I treat these key levels as mini zones to just give them room to breathe, right? And that being said, my stop loss is typically a candle close under the zone that I created, right? And if you look today, like throughout the rest of the day, you know, this level ended up holding, right? This zone pretty much did end up holding the majority of the day, and then we continue to the upside later in the session. Now, now that we finally got this big breakout, right, at the 652 candle, that's a strong bullish momentum candle. For the next 4 to 6 minutes, we are just pushing to the upside. Keep in mind, right, there's divergence here against QQQ. So this is why I'm eyeing AMD. It's on my close watch list. And this is how you avoid, fake outs. I came up with this saying not too long ago was weak breakouts equal fake outs, right? Why is that? Because when it's a weak breakout, that can be a liquidity grab, right? That can be a bull trap, right? And all that's doing is just fueling the move to the downside for a reversal. But when you get displacement like this, a big breakout to the upside, that's showing us, okay, buyers are definitely in control right now. And clearly that's what we got today. So I waited, got this pullback retest. I ended up entering this trade at 7 o'clock, 7:01. Now, what's my target, right? My target overall is the top of this range, right? This 164.75, right? First target really is this high of day because I want to see how price reacts at high of day. I typically do not scale out or sell at high of day because I want to see what the price action is going to do. Because if we can turn this high of day into support, right, that's clearly us moving higher to the upside. How do you know a stock is starting to trend when every dip is getting bought up aggressively? And it did try here. It did try, but unfortunately, it didn't end up holding. But nevertheless, I'm pretty much selling this at its peak, right? I sat through this candle, right? I waited for this candle to close and see what the next candle would do. When we pushed up and we made a new high, I pretty much sold my second scale out there. I sold majority on this candle here. I sold the second or the remainder of my position up here because I saw this go green to red very quick, and I didn't like that pushing up into this 164.75. And it was pretty much a good sell. I pretty much sold at the peak high of day. So very happy with that trade. That was the reason why I took it, how I enter my trades, where I exit, how I set profit targets, and so forth. So if we go here on TradeZella, as you can see, I got in here at 701, right? And this, I was looking for continuation on here. So this ended up being a very quick scalp. I wasn't even in this trade for, a full 4 minutes, right? Unfortunate here because the retest happened so fast. Um, I wasn't able to get in with my average position size, which is anywhere between 20 to 30,000. So I had to hurry up and get in. Because if you get in late, right, your risk is bigger, right? If you're risking off a key level, that key level has to be your stop loss. So the further the price gets away from that key level, right, the bigger your risk will be. So very solid trade here. Entered here, as you can see here, at 702 and sold at high of day. So I'm very happy with the trade. Very happy with the sell as well. Unfortunately, we didn't get that continuation to the upside until the end of market close. Yeah, so hopefully this helps. Just my thesis, how I build a thesis around a trade, why I take my trades, how I take them, how I scale out, and what am I looking for coming into market open, and all those things that add up to have confidence and conviction to take that trade.